China's latest economic data adding fresh concerns about a stalling economy. Let's talk about this with Dewardric McNeal. He's Longview Global Managing Director and a CNBC contributor. Dewardric, it's great to see you. So factory activity, some of these kind of key indicators of the economy. We've obviously seen crude oil prices. Just a nothing burger. Do we just have to wait for China's growth to pick up, or what do you think's going on here?
Good to see you, Kelly. Look, I think the latest data mixed, but still confirming the narrative that the recovery is stalling. And to your point, there's some global macro economic conditions that's out of balance with China, who has largely been dependent on demand for its exports. And so wait it out, sure, that's one way to look at it. But I think there's also a need for China to really address some of what they know they have to do around consumption. Domestic consumption is in the tanks as well, Kelly, with household income stagnant, youth unemployment at 20.4%. So you really cannot depend on demand to lead growth. And so something is going to have to give, but it's clear that the economy has stalled.
The youth unemployment thing, sometimes you think, okay, well, countries are idiosyncratic, but this seems to actually be emblematic of a much bigger problem, which is that there aren't good quality jobs so they got everybody through the educational system, but now they're coming out the other side of it, and they've had to go say to the big state companies, you have to hire and create more jobs for these grads. Now, we all know that's not a recipe for a productive economy, but you got to give people jobs or else they're not. I mean, that's where you start to talk about social unrest. So how deep do China's problems really run?
Well, I think with respect to youth unemployment, you raise a great point, Kelly. This is a highly educated group of Chinese citizens, but with that comes high expectations for the types of jobs that they're willing to take. You've heard the party encourage them to eat a little bitter, is the phrase, and take some jobs that are less desirable, but the youth have not really taken the party up on that. So they're going to have to figure out how to really employ the youth. If not, Kelly, we know the retail sector, the gig economy, all the things that really drive consumption is really depressed with that level of youth unemployment.
Yeah, they have a long-term problem that if they can try to fix a demographic problem, doesn't look like they're going to be able to. But in the more near term, the currency, right? It's weakening. It's going to be a headwind for their efforts to kind of get off of this factory-led economy that they've had. I don't know if we start talking about the currency being so weak as to kind of cause larger problems or ramifications. We mentioned how the Hang Seng, the index is down about 20% this year. So I don't know. And yet I still hear people saying, you got to look to China for the longer run, and there's investment opportunities. And companies who, normally are trying to increase their exposure there now have two reasons not to. Number one, the geopolitics of it. And number two, you just have to wonder about the growth opportunities.
Yeah, and this is a good point, Kelly, because a part of the confusion, and you heard Jamie Dimon just recently mention this, there's a lot of confusion over what takes precedent between national security and growth and development. Xi Jinping has said both are priorities, but most people believe, including many Chinese officials, that when in conflict, national security will take precedence over economic development and growth. And that also certainly does not lend for a lot of confidence in investing in China in the near term or the long term, for that matter.
Right. So you see, we've obviously talked a lot about Estee Lauder and different companies where the Chinese market wasn't quite what they were anticipating. So I guess if we decouple, so to speak, economically, that's just going to increase, military tensions over time. It's almost like I can see why business leaders want to maybe be careful about their exposure there. But if we don't really have as strong of a relationship as we used to, it doesn't feel like it's going to lead to a more peaceful outcome.
Yeah, look, I think you're hearing in Washington now a more realistic view around de-risking versus decoupling. I think an understanding that a wholesale decoupling is not desirable or possible. But with respect to CEOs, Kelly, I think, we've seen two trips this week, two very different trips. One where you've seen some attempt to be balanced in the assessment of what the problems are with respect to geopolitics. Another, Mr. Musk has been pretty visible in many ways, being used as a prop and propaganda for China. But I think these CEO visits can be helpful in getting both sides to understand what the business environment is like and how geopolitics from both sides of the spectrum is really impacting the global economy and these two economies, China in particular. So I'd like to see them be more productive on these trips and less of a prop for Chinese propaganda.